Welcome to the 2024 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this Tuesday, November 26, 2024 edition. Thank you for listening, ladies and gentlemen. Please be sure to subscribe or hit the like button, and I appreciate all your support. Today, we are still riding the highs of a fresh new Dow Jones record over 44K. Inflation numbers, according to the media, looks pretty good. And gold prices are up. Bitcoin is up for the most part this month. Everything is up as we close the end of getting closer to the end of November. So according to Yahoo Finance today, consumer confidence hits 2-year high as recession fears fade. Stock market optimism soars to record high. So they show you a picture of a bull market here. They think that a bull market is going to be incoming here for 2025, and maybe the case. Maybe or may not be the case because consumer confidence has been waning. You remember the last few months back in August and July, August, and September, they were saying, the media was saying that consumer confidence was kind of tepid. It was stagnant. It was stale. It was, holding steady. It wasn't growing. Now, lo and behold, we're ending November into December. Consumer confidence hits a 2-year high. Recession fears are fading and things are on the up and up. It rose from 101.3 in October to 111.7 in November. It's reaching its highest level in 2 years, aided by an improving labor market and easing concerns about a potential recession. Now, the question is to talk about easing concerns of a recession on Main Street or a recession on Wall Street? And I think this is pointing toward, the article is more pointing toward easing fears about a potential slowdown of recession on Wall Street, not Main Street. And that's why you see this huge euphoria. The metric jumped up higher. Consumers are feeling more confident. Confidence surged among younger Americans in November, with consumers under 35 driving much of the increase, according to this report, Yahoo Finance. Sentiment among those aged 35 to 54 dipped slightly after strong gains in October. Among income groups, households earning over $100,000 and those under $35,000 saw the most optimism, while the wealthiest consumers, those earning above $125K, reported flat or slightly declining performance. So as you can see, they're painting the picture now that everything is rosy. We're heading into a market now that's going to be a bull market in 2025. Inflation hit 2.6% in October, meeting expectations. The Federal Reserve Bank has been trying to get this thing down to 2%. They're almost there, according to their target metrics here. Now, what's interesting is, that the G7 or G7 nations are meeting in Brazil, I believe it is, Rio de Janeiro. And they're talking about all of these issues as we speak now. Those meetings are expected to continue throughout the end of November here. So even though inflation is coming down, joblessness is coming up, and the 30-year and the 10-year and the 5-year Treasury bonds are coming down, but they're still above 4%, which is pretty high right now, ladies and gentlemen. So one thing that's interesting too here is this report by CNBC points out that the average inflation-adjusted average earnings for workers increased only 0.1% for the month and only up 1.4% from a year ago. So basically wages are flat, earnings are flat, and they're not keeping up with inflation. So this is not a good sign in terms of that. And you can see the price index year-over-year change. We're at 3.3%. This doesn't include food and energy, as you know, according to the Bureau of Labor Statistics. Last year, all items is down to 2.6%. But if you include food, energy, transportation, utilities, and everything else, we're really at this number right here, 9%. That's where the real inflation is at, back up here, back towards 2022. So it's like the odometer is like rolling back the odometer of a car. The mileage is still there, but somehow they've tinkered with the numbers, and this is what you get. So gold volatility will continue to increase, ladies and gentlemen, but price should hit $2,900 an ounce. This is according to, Kitco News here. They're saying that gold should hit $2,900 an ounce in 2025 on geopolitics and fiscal concerns, according to UBS. So, gold was rising very steadily the last couple of months. I believe people were very surprised to see it above $2,700 an ounce. So they believe that next year the yellow metal will hit $2,900 per ounce on what everything is going on in the geopolitical world, as you know. So we'll see. But silver is the poor man's gold, as you know. That's above $30 an ounce. Hopefully, it can get up to $50 an ounce. It's something that's worthwhile to help those of us who are trying to make money back on it or something, because it's a slow investment with these type of things. They have to protect wealth, and they don't really grow as much as other assets like Bitcoin or something like that. If you into that now, stock market continues today. Like I said, the Dow Jones was up 123 points. S&P 500 was up 34 points. Nasdaq up 118 points respectively. Oil is coming down, only at $68 a barrel. Bitcoin is down a little bit, nothing crazy, but it's still above $91,000 per coin. So with oil coming down, everything else going up, we have a mixed market today, but they're still at a record territory. Dow's above 44,000 right now as we speak. So the investors shake off tariff fears that are coming next year and digest the Fed minutes here. You can see President-elect Donald Trump here and Xi Jinping at a 2017 event in Beijing. So we know that what's coming down the pipe is, could possibly be more inflation with these tariffs that could possibly go into effect in 2025. And President-elect Trump, as you know, plans to implement 25% tariffs on Mexico and Canada. This would be a reversal to the NAFTA proposal and an additional 10% tariff on China. So if all that plays out, happens, and there's a possibility that inflation could rear its ugly head again in 2025, meaning that inflation would go back up above 4%, 5%, and we will all be feeling the pain one way or the other. Whether it's trying to get a new car, or a new loan, or a home improvement, or whatever you're trying to do, it's possible that can happen. That is a possibility, just economically speaking. But the good news is that, like I said, the job market and the U.S. dollar remains strong against other currencies right now. Meanwhile, international stocks slid on fears of a widening trade war, with European, Japanese, and South Korean indices falling after President Trump's post. So investors also cheered the news of a ceasefire. We have a ceasefire between Israel and Lebanon. So we just have to wait and see how that plays out. If another conflict doesn't brew out in 2025 in South Asia or Africa or in Iran or something, then that bodes well for a bear market, at least on the stock market. Main Street, however, for all of us Americans, we're going to be hurting and suffering because the Fed doesn't look to be cutting rates in 2025. If they see all this stuff going up and unemployment holding steady at 4%, they're not going to be so keen on cutting these interest rates down at all. And they may, in fact, end up raising interest rates in 25, depending on how fast the stock market goes up and how fast all the commodities goes up, like gold and silver, Bitcoin, wheat, oil, etc. So we just have to wait and see, ladies and gentlemen. A lot going on. Enjoy your holidays today, tomorrow, and the next day, Thanksgiving. Holidays with friends and family, cohorts, chums. And God bless, and I'll talk to you soon after all of the holidays and see what the earnings come out to be in the beginning of December and the job report and all that. Thank you for listening. God bless. I'll talk to you soon. Take care. Stay safe.